We have with us Sumit Kumar, real estate research analyst at JM Financial Institutional Securities, joining in for a quick chat. Sumit, we'll come to some of the registration numbers out of Mumbai in just a bit and your overall views. But I want to start with DLF because on Friday they had this analyst call. I'm guessing you must have sort of also participated or you would have gathered your inputs. Anything new that came out of it?
First of all, good morning to the team and good morning to all viewers on the show. I think no major surprises in the DLF analyst meet. They highlighted the recent performance and outlined the growth plans for both the businesses, the residential and the annuity piece. In the residential business, they intend to sort of maintain that same pre-sales rate close to around say 210 billion, which they'll be achieving in FY25. And in the annuity side, they expect to grow their rentals almost 2 times from their current exit run rate of 50 billion to around 100 billion. So these things were already known, no surprises, and I think over the next 3-4 years, there is a significant amount of cash inflow into the company, which is basically 5,000 plus crores of rentals. You make almost 80-85% margins on that. And obviously, they've sold roughly close to 300 billion of inventory in the last 15 months, 4-5 quarters. So all of that, a large part of it is already sold. They just need to execute and collect, and hence, the cash flow position, the balance sheet looks extremely robust and healthy. And we do have a sort of constructive view on the name.
Okay, so constructive on DLF. Got that. There's been some chatter about whether the fact that the equity market cooled off, and now it's revived again, so these things turn very quickly, but there was some chatter that this cool off in equities, whether that will put a bit of a dampener on premium housing, especially in very hot markets like NCR or Mumbai. Did you pick up any evidence of that at all in the last 1 or 2 quarters?
So yeah, there is a wealth effect to to real estate where people sort of go towards physicalization of their savings and wealth. That is a trend, but at least in the last 3-4 quarters, or in fact in Q4, what we've seen is there is no let up in demand. I would say the hyperactivity, the speculative activity, euphoria has died down a bit, and that has been because of price growth has moderated. In my view, volume of take or absorption at all good launches, major launches by grade A listed developers have seen a good response. There have been a number of launches in Gurugram itself in the last quarter, in Sector 31 and Sector 54. There has been one launch in Sector 44 in Noida as well. What we have seen is that during the EOI process, the subscriptions were like 2 times, 3 times in FY24, last part of FY24. These EOIs were getting subscribed massively. That subscription levels have come down to reasonable levels. It's now like a 1.25, 1.5 times. And the developers end up selling 75-80% of the sales of the inventory that is open up for sale. So there are no sellouts right now. Price growth has moderated a bit, and that's actually good for the sector, if you ask me, because we don't want to get into a uncomfortable territory where prices are rising rapidly and sharply. But because that brings in speculative activity, and also the end users actually take a backseat because of that. So I think it's looking healthy. Volume of take remains robust. Pricing growth has moderated from say 11% in FY23 and 16%.
Sorry, if I can just Sumit, hi, if I can just come in.
Reasonable levels.
Yeah. Sorry, if I can just come in. What are your top sort of published top 2-3 ideas?
So definitely in the residential segment, we would like to back the people with a track record and a brand name. we like DLF and Macrotech in this space.
Okay.
And on the office side, we would prefer Embassy Office Parks as our top pick there.
All right, Sumit, we'll chat again. Thank you very much. Short on time, just running into market open, 6 minutes away.